Welcome to Money Talks. I'm Genevieve Westcott with the latest financial news from across New Zealand and around the globe. In this edition, is New Zealand in a world downturn danger zone? It's fluid, it's fast-moving, it's financial market mayhem. What's up as the world's biggest economy goes down? As the New Zealand dollar falls, exporters are happier, but the government says don't hold your breath for big changes to monetary policy. And why is John Key so keen to have a parliamentary select committee investigate the price of New Zealand milk? Is it just a sop to consumers with an election looming? All this and much, much more coming up. Let's turn now to the most up-to-date market and commodity information. Joining us now is ASB rural economist James Shortall. And James, it's been a roller coaster ride for the past 7 days.
Oh, roller coaster is a good way to put it because it's been all over the show. I mean, we've just seen so much volatility for equity markets, commodities, currencies, the whole lot. It's been interesting for traders and investors, that's for sure.
But equity markets have been completely hammered for the last few days. What are you seeing?
Well, it's interesting because, I mean, when they opened up after the downgrade of the US debt, they got smashed. They were down 6.5%, 7%. Over 3 days alone, they were down 11%, which is just massive, massive falls. That to look at those sorts of falls, we've got to go back to the dark days of 2008 when everything was, turning bad. So, it was looking pretty ugly, but all of a sudden over the past 24 hours, equities have bounced back really strongly. They're retracing some of the losses that they've made, earlier on this week. So, perhaps we're starting to see things stabilise. Who knows?
Now, last week the markets were very concerned about slowing global economic growth. It's changed now. We're worried about the U.S. credit rating. Talk to me about that.
Yeah. So last week, I guess when we talked, then there were two issues. One, the debt ceiling, and the second one being is the amount of borrowing is that really going to cause problems long term? So they've sorted out the debt ceiling. They haven't sorted out the second issue, and that was really what it came down to last week. Concerns around what was going to happen with the U.S. economy long term.
Overall, though, markets were down 11% in the U.S. That's the lowest since 2009.
Yeah, I mean, it's just ugly out there. I mean, and really, it's probably just been they're pulling on the handbrake a lot. The investors, a lot of funds out there that are really just trying to liquidate their positions, get out of them, and they're just prepared to take the loss just to make sure that they've got a bit of cash sitting in there, and because they really just don't know what this all means. And we've probably been saying it's going to take a couple of days before we really start to see the market get back to the fundamentals.
Meantime, here at home, New Zealand dollar plunged down to 79 cents. It's back up a bit now. Tell me about that.
Yeah, well, I mean, the New Zealand dollar is probably a good way to explain the volatility we've been seeing in the market, because when we opened up first thing on Monday morning, come into my desk, and we're trading around 84 cents against the US. By the end of that day, we're down around 82. Yesterday, on Tuesday, during a particularly weak part of the markets when the US had opened up, and also the Korean market was down 10% in one day. That's just a huge fall. Then the Kiwi dollar actually dropped below the 80-cent mark against the US. By the end of the day, 2 hours later, it was back up around 82 cents. And early on Wednesday morning, within an hour and a half, then we've lifted another two cents to close to 84. So that kind of gives you a guide as to how much volatility and the range of movement that we're seeing for currencies, for equities, for commodities, the whole lot.
Gold is just going off the chart. Is it still a good place to put money, do you reckon?
Well, gold's always the case where, when you've got nowhere to put your money, you put it in gold, right?
Yeah,
So,
exactly.
And that's certainly what we're seeing, and that's why gold prices have been lifting strongly, but also why we've seen US Treasuries in hot demand just over the past couple of days. So, if we do really see a lot of activity and people pulling away from the market, then gold prices may sit where they are. But they are at extremely high levels, and it's pretty hard to see them sticking around there for the long term, I guess.
Gold's going up, oil's going down, down, down. That's good for the guys at the pump here at home.
Well, yeah, it's going to be an interesting one because oil prices have actually tanked around 25% over the last couple of weeks.
How do you figure that?
Yeah, I mean, it's just, it's all about what it really means for global demand. And, out of the US, is their economy really going to put the handbrakes on? That potentially could. So that means that oil demand is going to be lower. And there's been some indications that, the inventories are starting to lift. So oil prices are back. If we do see the Kiwi dollar lift a little bit, then that might actually be quite good news for farmers, because they'll be going to the fuel pump and won't be paying quite as much.
Good news is what it's all about on this show. Thank you, James. Coming up after the break, telephone tag in Europe as the leaders furiously phone each other to find out what to do about Italy and Spain. The mighty USA takes a hit to its credit rating. Standard & Poor's tells President Obama, try harder. And latest data out of the U.S. reveals American factories fall to the lowest activity level since 2009, leaving fears the stuttering recovery won't quickly regain steam. Don't go away. Ponder this in our Farmers' Facts and Figures quiz. How much money was wiped off the value of New Zealand Stock Exchange listed firms on Monday after the U.S. credit rating was slashed? The answer when we come back. Stay tuned. Welcome back to Money Talks. Just before the break, we asked you how much money was wiped off the value of New Zealand Stock Exchange listed firms on Monday after the US's credit rating was slashed. More than 1 billion New Zealand dollars. With the global economy and the global share markets now in free fall, what's it mean for your investment portfolio? Joining us now is Senior Financial Advisor for Spicers, Jeff Matthews. And Jeff, it's been a heck of a week and a heck of a ride. What's your take on the markets around the world?
We thought 2 weeks ago that shares were a better value than bonds. And with the 15% drop, but before this morning's correction, there was a 15% drop in the last 2 weeks. So it means that shares are even cheaper. I mean, Apple's still producing iPads and iPhones. People are still filling up their car with gas. So Mobil and Exxon are still doing well.
Speaking of Apple,
it's a political thing rather than economic.
Okay, and speaking of Apple, it is now overtaken Exxon. It is the biggest, most successful company in the world. What does that tell you?
Well, you look at where they were, back in 2001 in the last serious recession, and you could have bought Apple shares for $3 or $4 a share. I mean, nobody wanted them, and they came out with this plastic thing that played music. And ever since then, it's just been a succession of fantastic products. And they're just in a sweet spot. I mean,
it is interesting. You're just taken over ExxonMobil.
Yeah.
the oil conglomerate. It's a major company now. Though Apple's worth $350 billion US dollars. This about 100 times the size of Fonterra. It's just phenomenal, really.
And it's sitting with $76 billion in cash.
So it could buy Bank of America, which is in big trouble, as we know.
It could.
Yeah, it could. Okay, Jeff, let's talk about Standard & Poor's and the credit rating downgrade to the U.S. What do you make of that?
Standard & Poor's is only one of 3 ratings agencies. Moody's and Fitch, the other 2, still hold the U.S. as AAA. Don't forget, a few years ago, Standard & Poor's and the other ratings agency, they had people like WorldCom and Enron, the energy company, as AAA rated, and both those went into receivership. So it's one of those subjective things. It's not like Valerie Adams, putting a shot book where you can actually measure it. This is a subjective opinion about, where economies or companies are at. And they decided that because of the political infighting that, they had concerns about the US getting serious about their debt. And so they downgraded it. And it wasn't a surprise. They told people 2 months ago. And the politicians waited until the last day to do a deal. And all that did was destabilize the markets. And you had the same problem in Europe. It's a political problem because they didn't deal with the issue strongly last year.
Yeah.
And so it comes back to bite them this year.
That's right. It all comes down to confidence. And it's politics and all that arguing. Yep. You shoot yourself in the foot. How are the share markets looking today in the U.S.? I mean, we've seen in recent days $1 trillion worth of U.S. money wiped off. People selling.
Well, it just rolls off the tongue, doesn't it? $1 trillion.
$1 trillion gone.
It's scary, but markets. Bank of America, I think, were down 20% yesterday. Back up 16-17% today. That's probably a case in point as to how volatile things are going at the moment. And I suppose it's in some ways it's quite good that we've seen quite a strong pickup today. Perhaps we are starting to stabilise. In my opinion, I thought it was going to take 3-4 days before really people actually start to understand what this means and they start the shuffling of the cards takes place. Perhaps we're starting to see that happen a little bit more now, and the dust might settle and we might just settle down a little bit more.
Are we looking at a triple dip recession? We're going to go back to that in the U.S.? We're not.
I don't think so.
And yet, look at the latest manufacturing and factory data that's come out. It's very, very slow.
It's weak.
It's very weak.
But that's not unexpected. I mean, American consumers are doing the prudent thing at the moment. They're actually saving for the first time in probably a decade. They're saving, 5.5% of their take-home pay, which they haven't done for years and years and years. And that's money that's not being used in the mall or on credit cards. So, they've probably in the last 18 months, 2 years, probably paid down about $1.5 trillion worth of debt. That's a good thing long term. But it doesn't help the economy in the short term.
And talking about the economy, U.S. Fed out this morning in Washington saying that they're going to hold interest rates at 0 for the next 2 years, and they won't be printing more money. Your take on that, Jeff?
Oh, that's fine. I mean, you can only help the economy so much. And I say printing money doesn't help. It helps in the short term, but you can't keep doing that. I think the idea that the markets know that interest rates are going to be 0 or quarter for the next 2 years is a defined period. That's helpful. And as soon as that was clarified, the markets took off this morning. It's up almost 5%.
But I guess that, to me, it also reiterates the point that their outlook on the US economy is pretty poor. I mean, yeah, sure, it's right now, it's not the core view that the US will go into a double-dip recession, but we definitely can't rule that out because things are looking pretty woeful. Right now, we're in a phase. If we go back 12 months ago, then everybody was all the news was yes, the economy's looking better globally. Right now, all the news is that things are getting actually worse. We're revising forecasts, revising outlooks, revising the economy down. So there's just been a huge run of bad news, and I don't think we can rule out anything at the moment. Economists
are saying, of course, the New Zealand dollar is going to go down. No doubt about it. What's your pick, Jeff?
I just looked at it the other day. I was writing a letter to clients, and I mean, you look back in March 2009, we were 52 cents. At the end of March this year, we were 78. We went up another 15% in 4 months, 3 months. I mean, it's all over the place.
What do you think?
People saying we're going to go to 90 or we're going to go to 80. I don't know, and I don't care. I'm a long-term investor, and I say, the currency is just part of that.
Although the exporters in this country will certainly care. And for them, at least, they're getting a bit of a break right now,
A little bit of
James.
relief.
Yeah.
A little bit of relief.
Yeah, a little bit of relief. Unfortunately, it might be a short relief. I think when we do see all this sort of flushed out, then people are going to be looking at where they want to put their money, and New Zealand is a good place to be. When we're looking at the US economy, we're continually seeing economic outlook or forecast being downgraded. It's getting uglier. The credit rating's been downgraded versus us here at home, where our economy is actually starting to pick up. It may not feel like it right now, but we've got consumer spending's going okay. We've got the economy's picking up. We've got the Rugby World Cup coming up in 30 days today. We've got the Christchurch rebuild. There's a whole lot of things that are happening that are quite good news for New Zealand. That's going to actually stimulate our economy. So if you're an international investor, you'd probably be thinking New Zealand's not a bad place.
It's not a bad place, but I mean, if you're in the US, which is a $15 trillion a year economy, and you want to put part of your money into New Zealand, I mean, what are we talking about? A fraction of 1% would absolutely swamp the local market. So even though people were, they got a downgrade in the States, what happened is people rushed to US Treasuries and pushed the yield down even further. So even though they had a credit downgrade, the first place people went to was to buy US Treasuries.
Let's go over to Europe now. That has really gone onto the back burner, and yet there are big problems there. Just look at the rioting in London and areas around there. That's really all about disaffected youth, isn't it? People that don't have jobs, have no stake in their communities, really don't give a damn.
Well, yeah, I mean, I was looking at some of those images, and it's pretty scary. I mean, seeing those riots.
It's shocking. There was a kid who looked to be about 7 years old in a hoodie involved, and this is going on in a fairly sophisticated, westernized country.
Yeah, I mean, you can't help but think that a lot of the people there are probably feeling, they've had a couple of tough years, so probably got a couple of tough years in front of them. They're feeling a bit cheated by the system, that they don't, they're prepared to go into a shop and rip the TV off the wall and those sorts of things because it's tough times,
Meantime, the head of Italy is out with his pregnant wife, having a summer holiday on a yacht, keeping an eye on what's going on in Italy from a distance. What do you make of that, Jeff?
Well, I mean, everyone deserves a holiday, but I would have thought that Cameron would have come back quicker once those riots started. I mean, you just need to be Johnny on the spot, and I did the French and the German politicians, they have played to their own local politics, and we've got a much bigger problem in Europe that should have been dealt with last year. If they'd come out with a big gun and said we're going to defend, the smaller European economies, and we've got this kind of war chest that we're going to use, problem would the problem wouldn't be solved, but it wouldn't become the problem that it's become, because then Portugal becomes a problem, Ireland becomes a problem. Now we're talking about Spain and Italy. You're moving up the food chain. That only leaves France and Germany, the two biggest, in the EU left. Everyone else have got issues. I
want to bring you back to something that you talked about earlier. John Key seems pretty confident that we're in really good nick, our economy here at home. Are you convinced of that, James?
Well, the economy is doing quite well right now, but we've still got a lot of issues to work through. Yeah. But at these points in time, then when there's a lot of focus going on governments around the world, the US, the Europeans, then you need to have your leaders out there talking your economy up. And I guess he's probably seen that as being the right thing to do. So that's I potentially see that's maybe a reason why he has been out.
Do you agree with that, Jeff?
Well, certainly we're looking probably at 4% economic growth next year. That's partly what's happening at the tail end of this year. But as you get into reconstruction in Canterbury, that's going to be a huge fillip for the economy. But I'm looking past that and saying, okay, where are the jobs going to be created? What kind of businesses other than Fonterra, who are doing well? Are the beef and sheep farmers doing well? Where are we going to earn the dollars, 5 or 10 years down the track? Is it going to be technology? Is it going to be engineering? Where are those jobs? Where's the next Fisher & Paykel Healthcare? Where's the next, emerging companies coming from? I don't see them.
I'll tell you what, I think the lesson from Apple and its incredible success now as the #1 company in the world is innovation. And that's something that a lot of people here talk about. Isn't innovation the way we have to go?
Yeah, but we had that talk fest, 10 years ago about the knowledge wave, and what came out of that is
exactly.
We're still producing accountants and lawyers. How many engineers do we actually produce? To have an engineering and a technology base, you have to have people with engineering skills. And we don't produce enough of them. If we do, we don't have enough jobs, so they have to go overseas.
We talked about Fonterra. Now it seems that John Key is going to have a parliamentary select committee look into the price of milk. Do we really care? What's this all about? Aren't we facing bigger problems here at home?
Well, I think we are, but the reality is that the average consumer out there feels like they've been dragged over the coals over this, higher than what they're paying for milk prices. So, they probably this could have been a non-issue if it was dealt with earlier on, and it's been dragged out, and it's probably going to be the right thing to do to try and sort this whole thing out, to be transparent about what the price is and where it's coming from.
Interesting. One of our studio crew has a brother living in Switzerland. He goes over the border to Germany and can buy a litre of milk for 60 cents. What do you make of that?
Well, those farmers are, obviously
and he doesn't milk the cow himself. He does not milk the cow himself. I thought I'd add that.
How is the goat?
Yeah, how is the goat? It is a cow, I am told. That just shows the range of pricing around the world.
But you don't know how many, what kind of subsidies they've got on those products over there. Look how many Canadians used to go across to the States to go shopping.
Absolutely, and I was one of them.
And they usually buy grog. But
yeah, we won't go there. We won't go there. Now, listen, I wanted to ask you about the all-black jerseys put out by Adidas, or Adidas, as some of you here call them. Were they just too greedy? Have they blown it completely, Jeff?
I don't know about the pricing, but they should get a different PR company, because it's been a PR nightmare. Stuff that the press releases that have come out have just made them look absolutely incompetent.
Well, I think going behind everybody's back and trying to convince people offshore not to sell the Kiwis is pretty dirty pool, isn't it, James?
Yeah, well, it's a really tough one. This sort of parallel importing happens all the time, and I guess it's a no-no in this case, that's for sure. But the biggest rugby event or sporting event to come to this country for a long, long time, and Kiwis can't get behind it. Now, they've got to pay the price to do it. It's pretty tough.
You seem to think it's going to be a huge injection into our economy. Of course, we're going to put a lot of money into as well. Jeff, are you convinced that we're going to make dough out of the World Cup?
I don't know if we'll actually make a profit out of it, but it's a chance to showcase New Zealand and what it is we've got to offer to overseas visitors. And now, originally they were talking 85,000. Now they're talking 95,000 overseas visitors. That has to be good.
Yeah, I was just walking here, walking to the studio this morning, and I saw a brand new bar. The builder's been out there, been wondering what's been going on, and that looks like it's opening up. It's opening up, probably a couple of weeks before the Rugby World Cup. We're going to see more and more of that. We're going to see lots of people drinking, spending. It should be good, I guess.
I know about the drinking. We'll be rioting next if we lose.
Yeah, listen, only James would notice where the new bars are coming to. We'll talk later, young man. Thanks. Coming up after the break, future proof on the highways and byways of the economic world. Our experts tell us what they'll be tracking over the next 7 days. But first, a question for you in our Farmers Facts and Figures quiz. The high milk prices have often been blamed on international prices. What were wholesale milk prices a ton in 2007-2008 compared to today? Find out after the break. Stay tuned. Welcome back to Money Talks. Just before the break, we asked you, what were wholesale milk prices a ton in 2007-2008 compared to today? Wholesale milk sold for $5,000 a ton in 2007-2008, but it's now fallen to $3,400. And now it's time for future proof. What's coming up for our experts? We'll start with you, James.
Well, I think it's we're in the agriculture industries. We've got to be following what commodity markets are doing around the world. So one thing that I've picked up has been of interest is that ag markets haven't been down quite as much as what a lot of the other markets around the world. So equities have been down, say, 11% over the last few days, bounced back up. And your oil prices, of course, we talked about that, been tanked, and other hard commodities that the Australians, of course, are exporting, and they've tanked a lot too. But agricultural markets have actually held up. They've been down sort of 2 to 3%. So we're talking about corn, beef, some of the milk prices out of the US futures and that sort of thing. So I think that's actually quite encouraging, and even over the past 24 hours we've seen them lift. So there's a few different dynamics that are happening there. I think it'd be optimistic to say that we're not going to be affected out of this, and we're not going to see some price falls. But at this point in time, it looks like we're hanging on.
What's going on in all of the Asian markets now, and China in particular? In particular, when you talk about agricultural commodities here at home.
Well, it's an interesting one, because we've got when we're talking about the different agricultural markets around the world, they're concentrating on different markets. So if we talk about some of the meat prices, beef in particular, concentrating on the US market, then that might be affected a little bit more than, say, dairy. Dairy is going to be, is really we're correlated with the Asian markets, with China, and those economies are still going pretty well right now.
Although we have seen a bit of a slump at Global Dairy Trade Auction. Is this a trend that's going to continue?
Well, yeah, we have seen a slump, but they're still, twice what they were, the historical averages. So they're still well elevated and still looking pretty good. I guess the big question will be long term is that the Chinese have been exporting a lot of product into the Americans. If they are affected by a slowdown in America and are out of Europe, then what impact that might have on their demand for our products. That's the key question. Right now, we look like we're pretty well positioned, but that's always going to be a risk.
And how about wool?
Well, wool prices have actually been pulling back, but I think some of that has been affected by...
Oh, you weren't going to mention that, were you, James?
I think some of that has been because of the Kiwi dollar, so they might enjoy a little bit more. But, if we look at cotton prices around the world, then they've been smashed, I think, over the last few months. So the outlook for wool, I mean, I've been questioning this for quite a few months now, and it's been resilient. So, I still question it now, but, hopefully I'll be nicely surprised.
Jeff, what are you going to be following over the next 7 days?
I just expect some volatility. I mean, we didn't think this correction was warranted, largely because politicians didn't do what they were supposed to do. So I don't see it so much as an economic issue, it was rather political. And so hopefully we can kind of build a base and just start to claw back some of those losses, because 2 weeks ago we were sitting around, Apple had record profits, Coca-Cola had record profits, the oil companies, 4 oil companies made $36 billion profit in a 3-month period. So company profits have been great. They're sitting on huge amounts of cash. So at the corporate level, things look fine. Okay, the economy may be slowing, but the outlook still looks pretty positive.
But now it's time for them to get to work and try and solve the problems. The U.S. Fed is not going to get involved. Is that your take on it?
It can't keep printing money, otherwise, the dollar gets devalued. it's just going to be a long, slow haul. I mean, you've had kind of a 20-year period where people lived beyond their means, and they had like a revolving credit facility, and which they maxed out, and now they're having to pay the price.
Well, keep your seatbelts on, boys. We'll be talking about this next week and the week after that and the week after that, I suspect. Thank you very much. Thanks to my guests, ASB rural economist James Shortall and senior financial advisor for Spicers, Jeff Matthews. Be sure to check out our website. Meantime, it ain't over until the fat lady sings. What are you looking at me for? The global economy may look like it's dead, but don't be too sure. Keep the faith. See you next time.